Welcome everybody to Wall Street Reporter's Company Spotlight. Today we are speaking once again with next Superstock presenter, Valeo Pharma, and the CEO, Steve Saviuk. Steve, welcome.
Yeah, thanks, Jack. It's nice to be back.
Yeah, I should say welcome back. So, Steve, about 10 days ago, you presented at our next Superstock live stream. We had a lot of audience interest, but the stock still is not well known in the U.S. I know you've applied for the OTC listing, so we're going to get more U.S. market interest. But for now, I'd like to take this opportunity really to introduce you to a wider audience, and then we'll open up for the audience chat. We'll take some questions from people watching the stream because that's really the main idea of these events. So. Steve, tell us what is Valeo Pharma all about for anybody that's new to the story?
Well, first of all, Valeo is a Canadian pharmaceutical company, Canadian specialty pharmaceutical company. What that generally means when we say specialty company is you focus on specialists, on very segmented therapeutic areas. So one area might be neurology as an example, or oncology as another of our two therapeutic areas that we focus on. So we really get to know the docs that are working in these areas fairly well, especially the key opinion leaders, the thought leaders and in these therapeutic areas. So our business model, we're not a research company, we're not a biotech company. We work with these companies that maybe in the US, maybe in Europe, maybe in Asia, that once they develop a drug, an innovative drug that has some therapeutic benefit for a specific disease. And when I say that, we're looking at things like a better efficacy, less side effects, or a drug that actually can treat a medical condition that currently is not treatable with existing medication. And these companies will develop these drugs, go through the clinical pathway, phase 1, phase 2, phase 3, meet their endpoints at phase 3, hopefully, then file in their jurisdiction, US FDA, Europe is EMA or by country, and for approval. That's at that point that we're interested in talking to them about Canada. So we're following them sometimes for a couple of years while they're going through this process and talking to them and saying, okay, now you've got your drug, it's gone through phase 3. We would like to bring that drug to Canada because we think it can bring medical benefits to Canadians. So our goal of our company is to bring these innovative drugs to Canada, drugs which otherwise would not have come to Canada. And the predominant reason is on a world scale, the US is the biggest drug market in the world. Europe is the second biggest drug market. Canada is about the 10th largest drug market in terms of listing. So companies typically...
Steve, how big is the Canadian pharmaceutical market?
$30 billion. But in comparison to the U.S. market, which is in the many hundreds of billions of dollars, you can imagine that the Europeans typically like to develop drugs in Europe and then come to the U.S. American companies like to develop drugs in the U.S. market in U.S. and then go to Europe. Those are the two big markets. So countries like Canada are often not on their radar from the point of view of actually establishing a business relationship here, setting up their own office here with their own personnel and what have you. So what they look for is they look for companies that have those capabilities and say, rather than us set up for our one drug potentially that we've developed for the world, in Canada, we would like to license to a capable company that has similar, maybe similar objectives, similar business thoughts, similar therapeutic interests as we do. And that's our main focus, is to in-license these for the useful life of the drug. So if the patent has 12 years to run, it's 12 years. There's something called data exclusivity, which is where a drug has the protection, not patent protection, another type of protection, of data protection for 8 years. We will typically license these for the useful patented or data protection period, build the register the drugs in Canada, sell the drugs in Canada, market them in Canada, support them, and we share essentially the profits, if you will, with our American or European partners on different ratios.
Okay.
So we make it available to Canadians, like really innovative, in some cases groundbreaking medicine that would not otherwise be available if it wasn't for companies such as Valeo and others. There are other companies in Canada that have a similar business model, but they're not necessarily in our therapeutic areas. For instance, oncology, there are not many companies that are in the oncology area. It's a very difficult therapeutic area to be in because of the amount of support that you need to provide to patients and physicians and what have you in oncology versus other therapeutic areas. So that's how we differentiate ourselves.
Okay, and I think one of the unique things you do, from if I remember from the live stream, is it's really it's kind of the sales organization which markets the drugs to like a doctor network, all the databases you have. I mean, you really have like an infrastructure which is designed for this.
Yeah, we're not just a sales organization. We're a full pharma company. The two things we do not do: we do not manufacture our own products. They're made by typically our licensor. We don't do any research and development. That's just not part of our business model. We leave to other biotech or other pharma companies that want to go through that many year process. So when a drug comes availability to us, not only do we license it, but we have to then register it. So there's quite a complicated process of, getting an American drug approved in Canada or a European drug approved in Canada. It's not an automatic, if you're approved in one jurisdiction, you're approved in another. It's a completely new submission with completely different questions that our regulatory body will ask. We have to support that. So we have currently 32 people working for us. It'll grow to about 40 before the end of the year. Some are sales staff, some are regulatory, some are marketing, sales. It's a fully integrated operation, but it's we basically do what the traditional big pharma companies do, other than the development, R&D, and the actual manufacturing. Okay,
so basically all the good stuff you keep.
Well, we get there at the time that a product's ready to be commercialized. So we're, that's that point of entry is there, but we need our biotech and pharma companies around the world to develop these drugs. Otherwise, we wouldn't have anything to bring to Canada.
Exactly. So what kind of revenues are you doing now? Maybe you can give like a brief snapshot of the company, the history.
Yeah.
And where it's going.
Again, we started in 2003. We sold our company, our assets, to Valiant, which has now been renamed Bausch Health. In 2014, we kept the same core team, kept the company name, kept our licenses, and our objective was to grow in new therapeutic areas, the main two being neurology and oncology. And the reasons for that are relatively limited number of target audience. And remember, our audience is not necessarily the patient. Our audience is the doctor. We have to bring our drugs to the doctor, and then ultimately the doctor prescribes them to patients. So we have to explain the benefits of a certain drug to physicians, and we don't do direct-to-consumer advertising in Canada. That is a completely different laws compared to, let's say, U.S. laws, which do allow some direct-to-consumer advertising. But essentially, it's bringing these products in and getting them to the market as quickly as possible. It does take time. So our revenues right now, we'll exit the year doing over 10 on a run rate of over 10 million Canadian. And why, and I got to admit that may not seem like a lot of revenue at the time, but why this is an opportune time to be for Valeo as an employee and owner of the company, shareholder of the company, or as external shareholders, is that the fourth quarter, which started 12 days ago on August 1st, is really a big turning point in terms of all the years that we've been working, in the sense that we're launching 4 products this quarter, which will dramatically increase our revenues, 2 of which have already been launched. One is Amatop, which we launched 2 weeks ago, which is a topical anesthetic used in the hospital. The other product is Yondelis in oncology, which we launched actually yesterday. We press released that out yesterday. We will be launching before the end of our fiscal quarter, which is October 31st, 2 additional products. One in the U.S. called sodium ethacrynate, or ethacrynic sodium, which is a generic hospital injectable. So we've partnered with an American company, and we're going to be launching that. And then we expect to launch our bioflavonoid before the end of the year also. So these are the types of products which will start moving us up to where next year we're looking at 24+ million of revenue, growing by an additional 50+% the year after. So our objective is within 4 or 5 years is to be well over $100 million of revenue, and that's just based on the products that we currently have in our pipeline. And when I say pipeline, I don't mean we're in negotiation. I mean these are all products we actually have license rights to. So again, in September, we expect the approval of one of our biggest drug yet, called Redesca, which we would launch probably beginning of December of this year. So there's a lot going on right now in Valeo in terms of products coming to market. And we can't forget some of the products we already have in the market, which are growing and which we're putting efforts into to grow. So I think it's almost at the perfect time of launch off of our revenue stream, of the addition of these new products and the continued growth of some of the older products. That makes it a very exciting time for Valeo, you know, for as I say, for our employees and for our shareholders. And that's why I guess our share price has risen in the last couple of months.
So really, I mean, essentially for investors watching, I mean, the bottom line is, you know, Valeo is, you know, at an inflection point right now.
I like that word. I've used that word before. Yeah, I truly believe that, and I think one thing that investors should and probably don't know as much, but as much as we're a publicly traded company, we are very heavily insider owned. Insiders, like that goes from the board of directors to management to every employee is a shareholder of our company. We currently own over 70% of the shares. So our financial interest is the same as our investor shareholders. We want to build value in this company. We're not in it just for the salary, or I mean, obviously you have to earn a salary to pay for your groceries and what have you. But this is not a lifestyle company in the sense that you're earning. You know, we have a very frugal pay scale. Everyone buys into the upside is share ownership, and the value that you can get out of that over time if we build this company the way we expect to build it is for everyone to be rewarded in that way. And I think that aligns us with investor shareholders, and I mean investor shareholders, people that buy the shares that don't work for the company. And I think we're probably unique in Canada to have that. We are unique in Canada in the pharma business to have that level of inside ownership. And it truly differentiates us, and you can see it internally. I mean, people make decisions based on their perception as they act like owners. They actually feel that that they have a stake in what is happening in the company, as opposed to just someone who has, you know, just a salary and so we want people that want careers. We want people that want to build equity in the company. We want people to invest their money in our company, and they all have. Myself included, I've put significant resources in. So it's very important. I think this part of our culture actually, and it's even down to our directors. And you can look at other publicly traded companies in Canada; they don't have the director ownership that we do, and everyone buys into the Valeo story, the Valeo vision. And I think that is sometimes the differentiating factor as to why one company becomes very successful and another company less so. Obviously, there's other factors, but I think the fact that everyone's kind of rowing in the same direction has a lot to do with it.
Okay, so the bottom line is, you're building. Your goal is to build a substantial business. To create shareholder value. Everybody's aligned with creating that value. So, what is the goal? What's the end? Ultimately, what's your vision for the company? What can this thing look like? Let's say 3 years from now, long term. I mean, not next week, but. Is this a $1 billion company? What's the goal here?
I think our objective is to build. It's a bit of like build it and they will come in a certain sense. I know it sounds like a movie title or something, but the idea is to build a dominant specialty pharma company in Canada. One of the biggest in its field. I mean, Canada is much like more so I think than in the U.S. because Canada does not have a lot of homegrown pharma companies as compared to, let's say, in the US or Europe. We have many subsidiaries of multinational companies here. And then you have some relatively large generic companies that are still family owned. But other than that, in terms of branded pharma companies, publicly traded, there are not that many. Some are mostly biotech companies. We've had a couple of nice sales. Revive, I think, is one that just went public in, I should say, in NASDAQ. But the objective of our company is to build an evergreen company, a company that's not being built, set up to be taken over. It's to build that, it's a legacy of these employees that years from now, Valeo will be seen as a dominant Canadian pharmaceutical company, and in certain therapeutic areas. And if you're a licensor wherever you are in the world and you've got an oncology product, what we want is that the first name on your Rolodex to call is Valeo Pharma, because they are the company in oncology or the company in neurology. And then I think the valuation will come. I mean, the valuation will come based on our earnings, not just revenues. Earnings ultimately play the important factor, and the margins are very attractive in pharma once you get over a certain base level, because they're very accretive. The same number of sales reps can handle more than one product.
Oh, there's a lot of leverage.
There's a lot of leverage on it. So that's the objective, is to truly build a dominant company. And it's not just my vision of it. It's all our management team and our board's vision of this, and the opportunities keep coming to us in terms of, now that we're in neurology, other companies from literally around the world do contact us to say, well, we have a product in this phase, would you be interested? So it's not that we have our pick of the best opportunities, but we're certainly in the hunt for the best drugs that can come to Canada. So it really is what drives us, and the share price will take care of itself, and the valuation will take care of itself. But the goal is to build something dominant in Canada, and the rest will happen.
No, it's certainly a big opportunity. $30 billion, in any market, it's nothing.
It's a big market. This is not a small niche market.
Right.
Obviously, if you compare it to some of the multinationals, which do 30 billion, 40 billion just themselves, it's a different magnitude.
Right. I mean, even if you do 1 billion in sales, that's still worth something, right?
This is 1 billion in sales in Canada would be a very, very valuable company. But even if you did 300 million in sales in Canada, you'd be amongst the premier Canadian pharma companies that are not tied into. See, the difference with multinationals is they have their place in the sense that they're entrenched, they have significant revenue, but generally speaking, they rely on the parent company, the head office, to develop drugs, and then they become the Canadian distribution for those drugs. We don't have that feeder kind of system that they do. So what we are looking for is that second tier of companies, which are not considered multinational, that develop first tier products. They're not inferior products, but they're the NASDAQ listed companies that may have a multi-billion dollar, $2-3 billion market cap, that have launched into the US. But again, their focus is Europe, it's not Canada. And our, from a healthcare perspective, we want to make some of these drugs available in Canada, and so do they. They just can't devote the resources to, they have to go after, earnings and revenues and what have you for their shareholder base. They can't that deflect from that and address, let's say, a considerably smaller market than they're attacking.
Yeah, you're Valeo basically serves. You serve as an important role in the pharma space.
Very much so, and it's not a niche role. It's an important role within Canada, as you say. You can build. Several years ago, Paladin was which is a company that I admire quite a lot, was bought over by Endo. Valuation was $1.3 billion. I believe their revenues were roughly 250, 300 million Canadian. There is tremendous value that can be built. Clearly, as owners, we
is that the role model? Is that are you following in their footsteps?
The business model that a number of Canadian companies follow, and there are not that many of them, but there are several peers to ours. Again, is in licensing, innovative drugs into Canada. And Paladin is a good model. They did an excellent job, and it spawned a number of other companies as a result of the sale and people leaving these companies. But I think, again, the things that differentiate us, and not necessarily in a specific order, are the fact that we are a fully integrated company. So we look a lot like a Pfizer and a Merck from the point of view of what we do internally, and less relying on outside consultants. So that makes us a bit different. Second, obviously, is our therapeutic areas of interest, which are different than Paladin's were, or different than today some of our peers are. So we don't necessarily compete for products per se, because someone might be in cardiology and not in oncology, and they're although they sound alike, they're very different, obviously, diseases and very different sales teams and marketing teams behind them. And the third is the employee ownership. You just don't see that type of employee ownership and insider ownership in a company, and it kind of makes us, we're a public company, but it gives that kind of almost private company in a certain way ownership feel, that people feel attached to this company, and we see it. I see it in not everyone, but in key people. It affects their decision making in a way as I believe is positive. There's a true ownership of this of the business, and there's a willingness to grow, and obviously that's going to expand as. You know, we have plans for expansion. We're adding, as I said, people this year. We'll probably add 8 to 10 at the very least. Next year, that number is going to probably grow by another 10 to 20 people. So to support the growing business, the growing revenues, and what have you. And there's not a lack of. Some people will say, you must have trouble finding new drugs. There are a lot of very, very good drugs being developed in the world yes, by Novartis, yes, by Pfizer, no question about it. But there are a lot of other drugs being developed by not the household names, but still very valuable companies that are excellent science, excellent therapeutic value. And these are the types of drugs that it's our job to find. And we spend a lot of time and effort in doing so. And that's part of the battle. And then the second part of the battle is to actually get them approved and then marketed in Canada and priced properly in Canada. And it takes a really dedicated team to do it. I think the top team is doesn't work a 40-hour week. It's more than that. We are very dedicated, and we want. And you look at it, and you talked to me before about value. I look at it from, we bring benefits to people. When you bring benefits to people, to patients, to the healthcare system, everything else falls into place behind it. And it's really like our culture internally is to say, we are helping people. And the case in point we alluded to, or I didn't actually, I was talking to some colleagues about is, in some cases where patients can't afford a drug, we will pay for that drug. And I think our peers will do the same thing. I think it's a lot of that is around not, well, how is this going to affect our earnings, or should we? No, this is about helping people that are very sick. And I think that is just part of what pharma companies should do. I mean, we're in the business of providing medication to people to make them feel better or to have a better quality of life. And ultimately the revenues and the earnings are byproducts.
Yeah. Steve, let's jump into some questions. We got a bunch of questions stacked up, and we're running a little bit over time, but let's try to address as many as we can. So I'm going to pop up the first one. Brandon, I think you addressed this.
Sure, it's a 70+%, and everyone's paid for their shares. We've invested probably as insiders over 8-9 million into the company ourselves. So
real cash. You wrote real checks.
Real like checks, not cash. All checks, no cash.
Jordan, what are the main features of the Parkinson's drug that attracted you?
Okay, there's different categories of Parkinson's drugs, and the levodopa is the standard that all Parkinson's patients are initiated on. Our drug is a bolt-on drug. It's an additional drug you would take, and it's called an MAOB inhibitor. And what it has some unique characteristics in that in Parkinson's, you typically look at, or actually the terminology is on time, off time. On time is when Parkinson's symptoms are under control. Off time is when they're not under control. And I don't just mean motor symptoms, the rigidity or the shakes or what have you. I also mean the non-motor symptoms, things like anxiety or depression or pain. Some of these non-motor symptoms. So our drug tries to smooth out that off time period. It reduces the off time period, and that's an important factor because when you're taking levodopa, which is your primary medication to control these symptoms, it's a peak and valley. You take it comes up to a peak, then it drops as the efficacy, and then you take another tablet and it goes up again. What we try to do is sort of level off that valley. So it is it's an innovative drug. It's selling very well in Europe, selling well in Canada, given its first year from launch. I think Supernus in the U.S. just got the U.S. rights. They acquired the U.S. rights within the last couple of months, which we're very pleased to see. I think that'll be a good supporter in the U.S. for the drug. And the drug has some other attributes that in Europe they're allowed to claim. In Canada, we're not allowed to claim. Some of the benefits for the non-motor symptoms. We hope that Canada will be allowed to start claiming that soon, but certainly our physicians are aware. Patients generally feel better when they're on this drug. And it's Parkinson's, unfortunately, there's no way to slow it down. There's no way to stop it. There's no way to reverse it. You're in the situation of managing symptoms. And this drug helps with that management of symptoms. It's a very, we believe, an important part in Parkinson's therapy in Canada.
Okay. So just anybody we're running a little bit late. We have anybody that's waiting for Predict Medics will come on in a couple of minutes, but let's address a couple more questions from the audience. So Steve, let's go to what about the bottom line forecast? Are you going to make a prediction?
Yeah, well, I can certainly talk in sort of general terms. Currently we've lost money in the last couple of years as our revenue have grown, are starting to grow. We obviously have an internal infrastructure to maintain and what have you, but we expect to be break even by the end of this fiscal year, which is October. So that's very realistic, and essentially by the launch of these 4 products that we're talking, that will generate enough margin to push us into profitability. Going forward, our objective is EBITDA profitability of 25% or so, and we think that's very attainable. So you can imagine if we jump revenues to 50 million, that would be 25% of 50 million. It's a very, as you mentioned earlier, a very leverageable business. There's so you got a team of sales reps. They're costing you so much, marketing you one product. You add a second product into their bag, which is very normal. There's no incremental cost to that sales team. So all the margin you're making on that second product and even on the third product fall essentially to the bottom line. So that's the holy grail of all pharma companies, is to make sure that their sales team, which are a significant cost aspect of pharma, that their sales teams are actually leveraged to the maximum of ensuring that the message gets across, but ensuring that they have a number of products to market to physicians, or to make physicians aware of.
Yeah, it's important. So here we got a related question. Can you give an indication as to what the total combined market size is for all the drugs that Valeo will sell?
In the many hundreds of millions of dollars. It's billion, maybe even $1 billion. It's huge. The markets we address. Naturally, there are many drugs in these markets, and sometimes they do slightly. So, for instance, the Parkinson's market on its own is about $120 million market, which is not huge in Canada, but nevertheless. Our end of that market is about $10 million. That's what we expect to gain. If you look at the market for Redesca, which we expect to get approval of in the fall, it's a $200 million market. We expect to get about a quarter of that market, probably about $30 to $40 million of revenue. So to sum them up, I've never really done that, but I would guess it's in close to $1 billion, $750 million, and that's for just the products we've actually launched right now. I think as we go forward, that number will increase.
Okay. Oh, so again, it's a follow-up. He's asking a follow-up question. So if you're doing 100 million in revenue, is it to say 4x?
Yeah, that multiple doesn't seem out of sorts. It seems reasonable. I think that what's important, Lee and Jack, is when you're looking at companies, you're looking at if 2 companies doing $100 million of revenue. One has really, let's call it a very light or barren pipeline. It would probably trade at that 4 times revenue. If you're looking at $100 million company, revenue company, but that has also an exciting pipeline that people actually can start, analysts and healthcare specialists can look and say, well, you know, that 100 million in 3 years is going to be 150 million, or it's going to be 200 million, or what have you. They'll prescribe a much higher multiple to that. And you can see that those valuations are there in the Canadian marketplace today. Sometimes you'll say two identical companies, why are they valued so differently? Because the prospects of one and they're still not is much higher, so they're projecting into the future. They're discounting that. You know, you hear about this discounted cash flow, things of that nature. That's what's happening. So it gives the sense that, and that's our expectation, is that we'll be valued at the higher end of the multiple chain or multiple values, because people will look into our pipeline and say, wow, they have some really interesting drugs in their pipeline that will drive future revenues. So this is not a business we want. You know, we're talking 100 million top line sales for what we have in the pipe today, signed ink on paper, but that's going to change in 6 months. We'll be adding to that. So
the distinction, I guess that's a very important distinction. It's the size of the pipeline, the quality of the pipeline, that has a big impact on the valuation. So whatever you have now, it's really, people need to focus on what's the total picture.
You can't look at in terms of revenues, where our revenues are today. You have to look at where our revenues are in a year or 2 years. But more importantly is you can't say, when you look at those revenues, they have to be realistic revenues. You can't say, well, they're hoping to find a product. They haven't got a product yet, but they expect to. No, what we project and what in all our financial models, and we have, you know, our CFO is a great guy, and he's modeling. We model extensively. It's revenues from products that we have the rights to. The ones that we have a nice sort of a pre-licensing pipeline, if you will, of companies we're talking to. Yes, for sure, we start looking at what could those revenues be in that, but those don't find their way into our projections until we sign the licensing agreement. At that point, you can start saying, okay, we own the rights, therefore it's for us to drive that revenue.
Okay. You know, it's also interesting. Anybody that's watching this should definitely check out Steve's presentation at the next Superstock live stream, which was a few weeks back. We kind of went into an interesting discussion where, essentially, Steve, you explained that, you know, there are real models when you have this pipeline of drugs that you have, like, based on all the data that's out there, all this medical data, statistical data, you can pretty much know exactly what a drug will generate in revenues.
What we look at is a couple of things.
It's a very predictable business.
You start looking at the benefits of the drug that you're currently assessing. The medical benefits of the drug, and in the financial costs, cost of the drug, what you expect to be able to sell it for in Canada, because ultimately, you know, no pharma company can continue selling at a loss. We have to have some return on our investment to fund other drugs and go forward from that point. But we also look at, and in doing so, we look at data. There's the dominant company in the industry is called IQVIA, and they provide a surprisingly extensive amount of data on the pharma business. It's a very data-centric industry. The companies spend a lot of money accumulating data in terms of the size of the products, who writes the product. They don't have any patient data, but they'll know how many doctors write how many prescriptions. It's just sliced and diced in ways that you would probably not even imagine. And so it gives you a real insight into what's required, how many if you figure an average representative, a sales rep, will see about 1,200, can do about 1,200 doctor visits per year. You can actually start extrapolating that based on the number of doctors, how many visits, how many times per year they'll see that doctor, call points or touch points as they call them, and you can pretty well start to get a true sense of penetration and what it takes to get to that level. So, you know, one sales rep is not going to drive you $100 million of sales. It's just going to be, so you have to, so our numbers are based on slicing it back to this very much how many doctors, how many patients, how many prescriptions per patient per year. And that's how we build up our revenue numbers. And I think then they're defensible because we can actually monitor and assess our performance against those numbers. Not that if we're above or below, why are we above or below? Because maybe we have not deployed the right resources, or we are deploying the right resources. It's very interesting, and the pharma guys are the best at it. They know their data.
Exactly, Steve. Let's grab one last question. We're gonna have you back next week probably, because there's a lot to talk about. I know you have a lot of news in the pipeline. We got a lot of interest in the stock, so we'll have you back. We'll have an extensive discussion. But let's grab one last question, which is about the U.S. listing. Very important for a lot of our people.
Currently we're listed on the what's called the Canadian Stock Exchange in Canada, which is a recognized exchange and that many companies are on. It's not the most senior exchange, but obviously that's our plans are eventually to move up on those exchanges. But we have applied for a U.S. OTC listing. All the documentation is in. It's I unfortunately today I can't tell you that we have the definitive date, but certainly we're looking in the next several weeks to start trading in the U.S. And the predominant reason is because of folks like yourself that are exposing our company in the U.S. and U.S. investors having an easier access to a platform on which they can buy and trade and our shares. And we've also just started being quoted for trading on Frankfurt, and that started this week, and with a very similar sort of objective is that some European investors that knew about us because obviously we're a licensee of some European companies, so there's a bit of a tie-in that we're public and they like that particular company, what have you, in Europe. Again, it's much easier if they can trade in their sort of home country than necessarily coming to Canada or starting to trade the shares in Canada. So to us, it's about exposure. Exposure brings a lot of, I think, positive benefits to us. It expands our shareholder base. It makes us well known, potentially expands our access to capital, but also
it could add 50% to the value of the stock. I mean, once you start trading on the OTC.
And Canada, it's getting better in Canada, but I would say that for the last number of years, the Canadian market has been focused on other industries and not so much on life science industry. And it's been a bit of a disappointment to see some of our companies having to list on NASDAQ to be actually to unlock their value as companies, right? As public, in other words, going public on NASDAQ rather than say TSX or the Toronto Stock Exchange, which is our most senior exchange in Canada. And a lot of that is because the valuation, not just valuations, but understanding of the businesses is bigger in the US. The base of businesses that are investors that invest in life sciences, much bigger in the US, and more, not just population wise, because obviously you're 10 times the population, but you're looking at, a multiple of that 10 times in terms of knowledge. They're much more specialized. I think it's coming to Canada. Companies are helping out. There's a number of brokerage firms now that are putting more emphasis on life sciences, and as they should, because Canada is a home of a lot of innovation and I think value, and it should get its day in the sun, and we're seeing it now, and that'll help companies like Valeo.
Excellent. Steve, on that note, we'll look forward to seeing the OTC listing shortly. It's definitely, it's obviously it's an opportunity for anybody to get positioned in the stock now in advance of that. And we'll have you, Steve, we're going to have you back on the next live stream probably next week. We'll be announcing it shortly.
And we still have lots more to talk about. So I enjoy your company and your questions, and I look forward to being back.
Steve, thank you again.
Okay, sure.